This video is actually going to be a two-parter. I'm going to go through the actual financial offer terms of a contract here in the state of Texas. Ooh, because we all know it's like, ooh, what am I going to get for the house, or how much am I going to pay for the house? But a lot of times it's not just the price of the house. There are other financial terms that are going to, the buyer's going to end up paying more money, or the seller's going to end up losing money. Who knows? But I'm going to go through all of those things in two videos. So here's the first one. Stick around. Hey everyone, my name is Danae Hewitt and I am your go-to DFW Realtor here in the Dallas-Fort Worth Metroplex. So let's talk about the 1 to 4 family residential contract here in Texas. Now this video, I am not going to talk about negotiation strategies, if you're a buyer or a seller. No, I'm not going to go through that. I'm going to go through this. This is going to help buyers and sellers, but I'm going to go through what financially you need to be thinking about when you submit an offer or when you do receive an offer, and how that's going to affect your bottom line. As a buyer, am I paying more money? As a seller, am I not getting as much money? Let's get into it. So the first part is, of course, the sales price. I mean, right? We all want to know how much money someone is willing to pay for the house. How much are you willing to offer me for the house? So of course, that needs to be outlined. And also the buyer's down payment needs to be outlined in the contract. A seller needs to know how much money you are actually putting down on the house before they accept the offer. Okay, well that one is a given. The second one is the title policy. So the title needs to be moved out of the seller's name and into the buyer's name. And guess what? There's a cost association with that. And what is that cost, you might ask? I have a cheat sheet. So Capital Title is my preferred title company here in the Metroplex, and they have provided Texas title insurance rates. It's a little cheat sheet that I have here. And the reason why we have a cheat sheet is because the price of this title policy transfer depends on the price that you are paying for the house. So of course, it changes with every dollar, okay? So let's say, for example, you're buying a house for $300,000. That title policy transfer is going to be $1,886, okay? Now, if the home is $700,000, then that title policy is going to be $3,994. So you can see it's quite a bit of a jump from that $400,000 difference. We're right under $1,900, and then the $700,000 price point, we're up to almost $4,000. So I love using this. So when I'm talking with my buyers and sellers, I can let them know, hey, they're going to pay for it or they're not going to pay for it, and this is how much it's going to cost you. The third thing to think about is the survey. Now, if you don't know what a survey is, it's a bird's eye view of the property, and it outlines all of the boundary lines, any encroachments on the property, any utility easements are going to be outlined there. The house, of course, will be on there. If there's a pool or a fence, the driveway, the sidewalk, all of these things are going to be on this survey, so you know exactly where your lot lines are, and you know exactly where you can and can't put things on your property. Let's say if there's an easement 10 feet off the back fence, well then you can't put anything back there, because if the city does need to access that easement and your structure is on there, guess what? That structure is going to go, and it's going to be at your expense because you put something over that easement. Okay, that was a kind of a little bit of a tangent, but that's what the survey is. If the buyer happens to be paying cash for the house, then technically they don't have to have a survey, okay? They don't have to, but I always recommend that they do. I don't care. But some cash buyers, they may not care. Almost 100% of the time, a survey is going to be needed when a property sells. So let's say the sellers, they don't have the survey. They lost it. They can't find it in their paperwork. They can't look back in the email. They just don't have a survey, and a new one needs to get done because one is required for this transaction. Then at that point, we need to figure out who's going to pay for the survey. We need to know that when the offer is submitted. So I would say a rough range for a survey, if you're just getting a single family residence on, like a quarter of an acre, that's probably gonna be $500, maybe $600. $600 is probably really on the high side, but just to be safe, $500 to $600. If the property is on an acre or more, that's when you're going to see that survey be $700 to $800 because the surveyor is surveying more land. So just have that figure in your back of your mind. If for some reason the seller doesn't have the survey and a new one needs to get ordered, who's gonna pay for that? Now, the next thing actually deals with the survey and with the title policy. So in the title policy, the survey is not gonna be included in any of that coverage unless you check yes and you check who's gonna pay for it on the contract. So we need to know this up front. If you would like some extra insurance on your survey, we call that shortages in the area. So this means that the survey, the new survey that is done or one that is provided by the seller already, that needs to be submitted to the title company along with a T47. Well, what is that? A T47 is something that the sellers fill out and they have notarized, and they write down any changes that they have done to the property and that is different from the survey that they're submitting to the title company. Because the title company, they don't come out and they don't look at the property and they go, survey, yeah, and they don't do that. They are trusting that this T47, which is notarized, is accurate before they give any insurance on the property. Now, what do I mean? Oh, insurance, like what does that mean? So let's say you did pay for shortages in the area, and I'll get to that cost here in just a little bit. And let's say, oh my gosh, that survey is wrong. The surveyor got it wrong, and my neighbor's fence is encroaching on my property. What? Well, of course, what you can do is go to your title company and say, we paid for this extra insurance and their fence is encroaching on my property, and now we gotta go to court, we gotta figure out who's paying for all this, and that is going to be all figured out with your title company because you paid for that extra insurance. So how much is this? Well, it is actually 5% of the title policy amount. Let me get this again. Okay, so let's say the title policy for a $700,000 house is $3,994. 5% of that is $199.70. The cheapest insurance I think you could ever pay for a house, and it is so worth it, and it's a one-time payment. That's it. So if you're buying a house, I strongly recommend that you buy this extra survey coverage. You will be so glad that you did, and it's only for a $700,000 house, it's $200. If your house is less than that, $150, $100, so worth it, and it's a one-time fee. That is something I highly recommend that definitely gets paid for. But again, is it gonna be the buyer or seller paying for that? That's what we negotiate. The next item that would need to be financially figured out in an offer is if the home is in an HOA. And I'm gonna get to that in part 2 of this video. The next part is the property condition. So this will state if the buyer has received the seller's disclosure or not. But there's also a line that says that the seller at the seller's expense is going to make a certain number of repairs. And that's in the offer before we even had any professional inspectors come out to the property. All right? A lot of times inspectors don't come out before the offer is submitted. I mean, the majority of the time they don't. So here's an example. So maybe the fence is blown down on the very back. We just had huge windstorms. Yikes, the fence blew down. Well, in the offer, the buyer could state that that fence needs to be put back up. Of course, word it better than I just said it, but that could be a financial expense for the seller. So that's definitely something that a seller would need to be on the lookout for if they accept this offer, if they have no intentions of fixing that fence, let's say. The next part is residential service contracts, or I like to call them home warranties. So this is separate from homeowners insurance, okay? Homeowners insurance is what the buyers pay for, and they get to shop for that, figure all that on their own. A home warranty is a separate company that will come in and warranty items in the house for the first year that the buyers are in the house. And these contracts, I would say at a minimum, you're at about $650, of course, depending on the company. And if you want to add more things to be covered, then of course it's gonna cost more money. So normally a refrigerator is not covered in the home warranty. Well, if you want it covered, then you're gonna have to pay for it. A pool is not covered in the home warranty unless you pay for it. Septic, unless you pay for it. So the home warranty can be as low as about $650, but it can easily go up to $1,000 if the buyer does want to warranty more items in the house. So in how the contract reads is that the seller will pay a certain dollar amount of the home warranty. Now it can be $500 towards the home warranty, and then the buyer would pay the difference if they got a $600 policy, let's say. But it could be for the entire amount. Let's say you are selling a house with a pool and on a septic system, and they come to you, they pretty much maybe already know in the contract which home warranty company they're going to go with, and they come to you and they say they want you to pay $950 towards the home warranty. Well, then you know it's going to cover all these things. So of course it's going to affect the bottom line. That means that the buyer is not paying for this, the seller is. And then of course the seller can negotiate if they want to pay all, part, or none of that amount. The next thing that we need to financially negotiate is possession of the property. If possession is upon closing and funding, which literally means like the house is vacant and the buyers can move in the day that they close and fund on the house. Or it's according to a seller's temporary residential leaseback. Now, if it is according to that leaseback, I'm going to get to that in the second part of this video. The last part for this video is going to be seller concessions, or also known as seller contributions. So what that means is at the closing table, the seller is going to credit the buyer a certain dollar amount that the buyer's agent puts in that contract at the closing table. And that money can be used for fixing the fence. Maybe the seller doesn't want to fix that fence I was talking to you about, but they're saying, oh, we're going to give you $5,000 and you fix it after closing. Okay, maybe it can be used for what they're being used for a lot right now. It's to help the buyer buy down their interest rates. Well, the seller can give the buyers some money to help them do that so that they can better afford the house. It can also be used to help pay for the client's closing cost, let's say. What seller concessions cannot be used for is to help with the buyer's down payment, okay? That money, 100% of that down payment has to come from the buyer, unless you're in a down payment assistance program, but let's not get into that. But in general, the buyer has to pay for 100% of their down payment, and the seller can give a contribution for closing cost, buy down an interest rate, you know, things like that. But that needs to be negotiated up front. So basically, when you're looking at the contract, or if you're putting an offer in, or your seller, you've got the contract, and if someone is offering $600,000 for the house, but they want $10,000 in seller concessions, that's really only a $590,000 offer, okay? Because you're basically giving them 10 grand right off the top. Something to think about. All right, stay tuned for part 2, which will come next week, and I'll go through the other financial things that have to be negotiated up front when an offer is presented to a seller. If you got any value out of this week's video, then definitely let me know in the comments below, and I'll see you next week.